I want to show you something that I have been utilizing for, it's got to be over 3 decades now in my trading. It's very basic in nature in a way, but that basic nature does not mean that it is not powerful. It's still extraordinarily powerful. And this will touch upon some things that you already know, but it's also going to leave you with something that I want you to really focus on, especially in this upcoming trading week. The first thing I want you to know is that we're looking at a 2-minute chart, Uber Technologies, Uber. On this chart, there are 2 main moving averages. You should all know what those 2 moving averages are. It's a 20-period simple moving average, the 200-period simple moving average. I don't consider a chart unless these 2 moving averages are superimposed on it. It tells me a great deal of information about the stock. Let's cover some basics once again, just because we always have some new people coming on board. Some basics regarding these 2 moving averages that some of you need to be reminded of as well. The 200-period moving average is the most powerful when its state is flat. Relatively flat. So you don't have to bring out geometric tools or, right angles to measure how flat or straight it is. Generally flat. When your 200-period moving average is generally flat, it is in its most powerful state. Now, this does not mean, people, that the 200 lacks power when it is at an angle, up or down. No, the 200 always possesses power. I am telling you that its optimal state in terms of power is when it's flat. The other basic thing I want you to remember about the 200 or any moving average for that matter is that it's never the line that the chart shows you. It's always a zone. So you should never look at a moving average as if it's a skinny line. It's a zone. And if I were to build my own charts, I would have somewhat of a glow. I would have every moving average presented as a glowing thing, stronger in the middle, but glowing on the upper and bottom side of the moving average. So it would be sort of like a rays that emanate from the center. It would not be presented as a skinny line as most charting platforms do. But the key thing is that it is an area, it's a zone. It is not as specific of a line as charting platforms would have you believe. The 20-period moving average is the most powerful when it is trending, and it is the least powerful when it is flat. So it is virtually the opposite. And this is why they pair very nicely together. You should never look at a chart irrespective of the time frame. It could be a monthly chart, a weekly chart, a daily chart, an hourly chart, a 15-minute chart, a 2-minute chart, a 3-minute chart, a 1-minute chart, whatever. You should always superimpose on it the 200 and the 20. It's the perfect pair. And your moving average system should have a longer-term moving average paired with a shorter-term moving average. The shorter term in this case is the 20 and the longer term is the 200. So it's a perfect pair. No matter what market you're looking at, this applies across all markets in all time frames. So you'll always see these 2 moving averages on my charts. Once again, the 200 is the most powerful when it is flat or flattish. It is the least powerful, not devoid of power, but the least powerful when it is trending. The 20 is the most powerful when it is trending. It is the least powerful when it is not trending. So they share the opposite. With that being said, what do I mean by the most powerful? What I mean is that if your 200 is flat and your stock is under the 200, the 200 will tend to serve as an area of resistance. If your 200 is flat and your stock is above the 200, that 200 tend to serve as an area of support. When it is flat, it has strong support and resistance qualities. When your 20 is trending and your stock is under the 20, it will tend to be an area of resistance. If your 20-period moving average is rising and your stock is above the 20, it will tend to serve as an area of support. Not forever, but for a period of time. When the 20-period moving average is flat and wavy, your stock will tend to ignore above and below the 20-period moving average as if it's not there. It's important to understand these states, okay? Flat 200, stock below, your resistance. Flat 200, stock above, your support. Rising 20, stock above, you are support. That 20 is support. Declining 20, stock below, the 20 is resistance. And wavy to flattish 20 is ignored. Crisscrossing it back and forth. Knowing these states in and of themselves places you in a position to really be able to find opportunity and design a trading plan. So for instance, if I see that my 20 is in a declining state, I know that the best odds when a 20 is in a declining state is to play downward. To play down is to play down is to play down is to play down. If my 20 is in a rising state, I know that the best odds are to play up. The best odds are to play up. The best odds are to play up. If I know that my 20 is sideways, banking on follow through has low odds. My stock is likely not to follow through for a period of time. Up moves, short-lived. Down moves, short-lived. If my 20 MA is flat and my stock is under it, I should not bank on the stock breaking through the 200. If my 200 is flat and beneath me, I should not bank on the stock breaking through. It doesn't mean it's not possible. We're talking about odds, what happens most of the time. And just this places you in a high probability position of getting the direction right and what's going to happen next right. If we take a look at Uber here, we've got a relatively flat 200-period moving average. And we know that banking on the 200 being penetrated is a fool's game. Not that it can't happen, but most of the time it doesn't. Banking on this penetrating permanently is a fool's errand. So your 200 flat, you don't bank on that. So what this also does is if you don't bank on the overhead flat 200 being penetrated, is there an opportunity to make money from this propensity to fail? Of course there is. And this is where surges off the flat 200 come into play. This is one of your most reliable event, a surge downward from the area of the 200. Your 200, and you surge downward. This surge from a relatively flat 200, there it is right there. That surge, I want to give you three positions. Yes, this is one position. Another position can be like this. It can start from marginally above that 200. Remember, because I told you the 200 is a zone. It can start a little bit below that 200. All of this is surging from the area of the 200 because the 200 is a zone. It is not a skinny line. All of this is surging downward from the 200. You can also do color changes anytime you're around this 200 area, but when do you get a color change? Boom, you get a color change there. What's a color change? Well, a color change is when you want to trade downward, but you have the opposite color gets neutralized by your desired color. That's a color change. The opposite color gets neutralized by your desired color, red. So yes, you can do color changes, but the very best are surges, strong elephant bars, sharp drops from the 200. They are the best and the most certain of them all. Now, let's take the 20. The 20, just like the 200, is not a skinny line either. It also is a zone. It's a cushion. It's a fence that your stocks can lean on without breaking. There's some leeway there. Never look at it like it's a skinny line, because you'll get fooled by what appears to be these temporary breaks that aren't these breaks. So just like the 200 is that zone, the 20 is that zone too. The reason why I'm drawing this in for you is because you'll see something interesting. You'll see where these zones start intersecting, you see, with each other. That's usually a very nice turning point in your stock or in your underlying item. You see how those two zones came together? And then you get the surge off the 200? That was the major turning point. The major turning point was your overhead 200 and your rising 20 came like that, you see? And then you got that surge off the 200, boom! And that was your sign, it's now time to go the other way. It's beautiful. So these two moving averages will ebb and flow apart from each other, then back toward each other, apart from each other and back toward each other. They're just like the perfect combination. But when they come together, there's usually a sign that a significant change in the nature of your underlying item is going to take place here. So you won't get fooled by these little tiny temporary breaks of the 20, because you realize that's not necessarily a break. That could just be leaning on the fence. That's still in the 20 MA zone. It's not a real break. I want to talk to you specifically about how to play these, what appear to be these temporary breaks. The way you do them, since we don't really know absolutely for sure if this is going to keep going, we don't. What you have to do is you've got to wait to get back inside of the zone. So we have temporary got out, and then boom, we're right back in. The 20 or the fence has swung the item back in play. So anywhere in this bar back in play is your entry. Boom, bet on the downside. You see? So we temporarily get out of the line. When does the line slam or push the item back into play? Right here. Anywhere back into play. Boom, you bet on the downside. This can also be done with the 200. If you somehow were to peekaboo out of the 200, when do you get back into play? Boom, you're back into play right there. You see? So peekaboo, back into play. Peekaboo, back into play. Yes, you can just do a simple color change, which will tend to get you in a little earlier. But if you're looking for certainty, color change here, boom. You can do a color change here. Now, why is that still a play, a color change play? Because remember, the 20 is an area. Let's do it again. That's still right against the 20 area. It's not against the middle line, but that area is still in play. Don't forget, it's a zone. It's not a skinny line. So color change, boom. Color change, boom. Yes, you can do this color change, boom. Color change, boom. Why can you do these with confidence? Your 20-period moving average is declining. When does it start losing its efficacy? When the space between your two moving average pairs start to get relatively wide. You will start to see a breakdown in the consistency. So you can even see it where now the color changes don't go very far. Whereas before the color changes were dropping hard. Now they're barely dropping because you're widening. So I want to go back here to where at the open here yesterday on Uber, you had this scenario where you peekabooed above that 200, you see? And boom, you got back in play right there. You see that peekaboo above, and then boom, the next bar brings you right back in play. Think of the stock running into a fence, not breaking it, but the fence has leeway. It bends. That fence bends, but doesn't break. It's like boxing ropes. They bend, but don't break. Now, look at the wavy 20. Look at the wavy 20. And look at how the stock ignores the 20 as if it's not even there. Up, above it, now it's below it. Now it's above it, now it's below it. It's like the 20 doesn't have power when it is flat and wavy. Only when it is trending does it gain power. Let me explain how powerful this can be for you. What if the best plays happen off of the area of the 200 and off of the area of the 20? Because they do. And we know that the best plays off the 200 are the flat 200, and the best plays off of the 20 are when they're trending upward or downward. Why not focus 80% of all of your trades off of these two things? Why make the game harder if the best ones, the best trades, happen off of the 200 when they're flat, off of the 20 when they're trending? Why are you focused mostly on other stuff? Why not concentrate where the high odds are, where the follow-through rate is high, where the profits are fat and sweet, where the consistency is there for the taking? We tend to get distracted by all the lights and the shiny things that pop up every individual day in the markets. But we've got to learn to resist this and stick with the fundamental things that give us the best odds. But you can take this to anything. Like I just pulled up NVIDIA. Your 20 is rising. Can you take this color change here? Yes, because, or can you take this bottoming tail bar here? That bottoming tail bar is right in the area of the 20. Remember, the 20 is an area. Can you take this elephant bar, green elephant bar play? Yes, it's right off of the 20. Can you take this RBI? Yes, it's kind of right near the 20 range. Remember, it's a zone. Look at all these opportunities. 1, 2, 3 along the way. When will it start to lose efficacy? As you get super wide. Look at your flat 200, your flat 20, and look at how it ignores it. Up, down, up, down. See? And then it begins. Then the 20 starts rising. And look at how it obeys the 20. Anything, people. Do you understand? You think it's just once? Anything. Here it is again. Look at how it obeys the 20. Obeys the 20. Finally came off the 20. Do you see this? I'm not making it up, people. You can pull up anything in the world that human beings trade back and forth, and you will find that this will be true. Overhead 200 at the open here. Remember that 200 is an area, right? Now let's do the area of the 20. Remember I told you when they come together, you're looking for a major change here. So you see the convergence of the two zones. And then, boom, you get a drop. Now, remember, guys, this was green first. It went up first to kiss the area of the 200. And then it fell all the way back. Boom! And that was your key. Now, that fallback is really red. That's really a surge downward off the 20. Any fall is red. The chart says it's green, but every fall is red. So every fall is red. I don't see that as green. That's a surge off the 200. Boom. Look at the, you see how it started today. This gap downward, yesterday, but look at how close the two were up here, telling you that a change of some sort is definitely in the cards. Look at your surge off the 20. Boom. And then now you're playing color change off the 20, color change off the 20. Love that sound. Do you see how this is not rocket science, people? I hope you see that in almost every single session we have. I hope you leave saying, wow, this is really not all that complex. The most powerful things in life usually are not complex. Complexity is a sign of weakness. The most powerful things are simple, basic, in fact. They don't have a lot of moving parts. It might appear as though what I teach you are a lot of little things, but when you, over time, you start to see when you step back that, wow, it's really kind of like a small handful of things repeated in a variety of different ways over and over and over again. Marco's saying, but sometimes the chart looks different when it's forming live. That another way of, I think what Marco's also saying is that, Oliver, when you're not around, it's not as clear. And this is normal. It's normal. I was actually talking about this with some of my traders on Friday, yesterday, that it is normal for a period of time to see it late. Like, for instance, people are saying, Oliver, I'm always able to see these things after the fact. Like, I can see that as a surge off the 20 after the fact. I can see this as a color change off a declining 20 after the fact very clearly. But in the heat of the moment, I don't see it as clearly. Well, this is normal. This is normal. And the way I demonstrate it is this. This is you. So over time, so this is you right here. You see things clearly in the past, okay? This is moving forward, but you see things better in the past after they're already finished and done. Over time, you start to see it earlier, still in the past, but earlier, and then earlier. And then something flips. You start to see it clearly as it's happening. That's in the present. You start to see, oh, wait a minute. Here is, I'm moving back up toward my declining 20. Let's see. Uh-oh, I'm near it. It's still green, but let's see if a red takes out green. Boom. And you start to see it in the present. That's a great milestone. Not only start seeing, you used to see it in the past, see things in the past. Now you see things in the future, in the present, but mastery is when you start to see them in the future, your opportunities. So you move from first seeing things in the past to seeing them less in the past, to seeing them in the present, to seeing them in the future. This is a natural part of your growth. So let me give you an example of seeing it in the future. You can know, for instance, if I have an overhead 200 here, and I get a drop from the 200. Now, look at this. My 20 is already starting to decline. Now, right there. Now, in the future, I know that if this stock bounces back toward the 20 without violence and it gives me a color change somewhere near the 20, I'm shorting it. That's seeing in the future. The future is not there yet. It didn't bounce yet. That I'm actually seeing the play in the future. And if the play matches what I see and know to be a valid trade, I've known it in advance what I'm going to do. And as long as the bounce doesn't have anything violent in it, that's a different topic. Boom, I'm in on that color change. You see? Now that was in the future. I knew what I was going to do in the future if that happened. That's where mastery starts to come into play. So first, guys, it is natural to see behind you. It's clearer in the past. Then it's clearer less in the past and less in the past until it's clear in the present. And then true mastery is when you see it in the future. This is very powerful. So don't get discouraged if you're like, it's always clearer later. It's never clear for me in the present. You just have to keep at it. And I promise you, the gap between your present moment and when you see it clearly gets smaller and smaller until you're able to see it in real time and know it. And then you'll go to the next stage, seeing it in advance. Is my 20 rising or declining? Do I have a flat 200? Are they close, signifying a major change is in play? Keep in mind that your best plays are off of something, off of a flat 200, off of a trending 20. Focus 80% of your actions off the 200 or off the angled 20. And you're going to watch your consistency and your reliability soar.